You already have an option with the IRS. They already picked it for you. You just haven't read the paperwork yet. Hi, I'm Andrew Samaniego. Welcome to Tax Debt Live. I'm here with my dad, Carlos Samaniego, head of Tax Debt Consultant. And today we're going to be going over the 5 different options that you have to resolve your IRS debt. And there's actually a 6th option, and we'll get to that in a second. So we got the full pay plan, the partial pay plan, the currently not collectible, the offer in compromise, and bankruptcy. And the 6th option that the IRS chose for you, collections.
That's always the option. A lot of people don't realize. We always say, Andrew, right? The IRS has options, as Andrew just kind of brought up. You got options to resolve your tax debt, and there's also an option that they have, and it's basically you don't do nothing, and they just come after you and give you come after for everything that you got if you don't actually deal with it. Good to see you, Andrew. How you doing, man?
Doing good. We just been basically cleaning. So I have my brother-in-law coming over this weekend, so we're gonna have fun with him. Headed down to Carmel, go see the sights. Might go to the aquarium. We'll see. I know you just got back from the East Coast. How was that?
Boston was a blast. We had a chance to visit Bella up in Cape Cod, and for those of you guys that don't know, Bella is actually at the U.S. Coast Guard Academy going through summer training at a small boat station in Cape Cod. Woods Hole. I got to be, I guess, specific. Woods Hole Station down in Cape Cod. Beautiful area. Now I completely know why people go, or the wealthy like going to Cape Cod, going to Martha's Vineyard. It's just absolutely gorgeous. Perfect weather other than the last day trying to get home. I was telling Andrew about this. It took us, our flight got canceled out of Boston because it was raining so hard.
Yeah,
and visibility got really bad. So, but got back in this week, and we're back to work. And Andrew had said, "Hey, Dad, let's talk about one of the biggest questions that we both get, right, Drew, is just like, well, what options do I have with the IRS?" And just to reiterate what Andrew just said a minute ago, the options are, obviously you have the ability to pay back your tax debt, right?
You're right.
If you have the ability to pay back all your tax debt, you pay off your tax debt. That's an option.
Yeah, either all at once or in payments.
Exactly, and that's where the installment agreement comes into play. The problem is that a lot of times, Andrew, right, people will try to do these installment agreements, or they'll call the IRS, and the IRS just gives them a number. It's like, okay, yeah, here's your installment agreement. It's $3,500 a month.
Right.
And that's where it gets really tricky, right, Andrew? So
yeah, most people can't just fork over $3,500 a month every month.
Yeah, depending on your situation, right? And I always say, Andrew, is that the reason they come up with that amount, a lot of people don't realize, is that the IRS does not do an installment agreement on like an individual tax year. They have to look at your total debt that you owe, and then they have to figure out what an installment agreement is for your total debt. Because a lot of times people will see a notice, and this is the one thing I don't like about the IRS, and they do this all the time. When you get your notices, they'll send 8 or 9 notices, especially if somebody has multiple past due balances.
Yeah.
And each notice is for a specific tax year. So they'll read the notice. They're like, "Oh, I only owe $15,000." And then a few days later, to get another notice that says, "Well, no, it's $18,000." And they start getting confused, right? Because they're going, "Well, they said it was 15 and then it was 18. And I tell people, well, look at the individual tax year that letter is for. That is the past due balance for that specific tax year. And here's where it gets kind of crazy, Drew, is that so every year that you owe money, there's a tax debt. There is a specific installment payment for that specific tax year. So as an example, let's just say it's 2025 tax year, you owe $10,000. The payment might be $300 a month for that year. And then you start looking at the other years, different balances, different monthly balances, but they're not going to give it to you for that specific tax year. They have to, again, as I come back around to this, it's for the total amount due. They have to come up with that installment agreement. And that's how they come up with sometimes some of the craziest installment payments that you hear. And you're like, I can't afford to pay that.
Yeah, and a lot of people get confused with that too because they'll get the total amount of tax debt, right? Let's just say it's $100,000.
Mhm.
And then you think, okay, it's just, 5 years divided by 12 for 12 months. That should be my amount. But in actuality, it's also including penalties and interest. So it's not the amount you're thinking of. It's a lot more usually.
Exactly. And then the other small part of that too is that the IRS has to take into consideration when the tax debt's going to expire.
Right.
So, if the IRS, as an example, let's just say you owe $12,000 for an older tax year,
Mhm.
and you owe $50,000 for another tax year, a much younger year. But let's just say there's only 6 months left to pay on
Oof.
that $12,000 tax debt.
Yeah.
Well, all of a sudden, just that tax year's $2,000 a month because it needs to be paid before it. And
Yeah.
I'm probably getting you all confused. Just understand, the older the debt, the higher the monthly payment's going to become because the IRS has less time to collect on it.
Absolutely.
So
That kind of brings us to our next type of payment plan is, okay, let's say these tax years are going to expire soon, but obviously a person's not going to be able to pay, let's just say $7,000 a month to fill that gap. One other option that we have is called a partial pay installment agreement. And it's basically, we have to run the numbers on your specific situation this individual taxpayer might have. But let's just say they can only afford $1,500 a month. If that tax year is going to expire soon, and you can show that you can only afford $1,500 a month, then that's what they're going to take. And then that rest of the tax debt might just expire.
yeah, that's actually, Andrew, I call this kind of the unknown secret. A lot of people don't realize when it comes down to dealing with tax debt is this partial pay installment agreement.
Mhm.
Because this partial pay installment agreement is a powerful tool if you can take advantage of it. And I'm thinking about one specific client. She was in the real estate industry. She was a broker
Okay.
and owed quite a bit. It was a multi-six-figure tax debt. And the minimum monthly, if I remember correctly, it was almost a year and a half ago I dealt with this one. But the minimum monthly payment was going to be like over $4,000 a month that they wanted.
Oof. Yeah.
And obviously she didn't have the ability to pay $4,000. She made good money, but didn't make that good of money to be able to afford a $4,000 payment. So she came to me. We actually do what we do. We run her financials. Basically, we're looking at her total monthly income, what her total taxes are, her expenses, the IRS allowable expenses, and we ran through all those numbers.
Mm-hmm.
And the partial pay installment agreement that we requested from the IRS was just over $350 a month.
Oh yeah.
Compared to
Huge.
$4,000 a month, $350 a month.
Mhm.
And the beauty, and exactly what Andrew just said, the beauty behind that is that some of those tax debts were really old. So she was paying that $350, and then some of those older tax debt actually got a chance to expire because the IRS has that certain time frame that they have to collect. And if they don't collect it while they're on this installment agreement, that debt does expire. So beautiful option. I think more people need to take advantage of that, especially now that the economy is really starting to slow down. And
Yeah.
if you watch the news, or heck, you don't even have to watch the news, just between the cost of people making less money, people being laid off due to technology, AI, and a variety of different reasons, I think more and more people can qualify for this, which brings me to something that's really important, Andrew, because I know you've gotten a few of these clients recently, is that a lot of times people, they will handle their, they attempt to handle their tax debt themselves. They
Right.
call up the IRS and they agree to whatever the IRS told them. Let's just say it was a very large payment. And they said, well, I guess that's what I got to do. I got to do that. Well, if that is you, if you agreed to an IRS installment agreement in the past, maybe you didn't have legal representation or representation from an enrolled agents like me and Andrew, is come to us and get a second opinion.
Right.
Because there is a very good chance that you really can't afford that monthly amount that you agreed to. And then what we can do is go back to the IRS and renegotiate that installment agreement, that partial pay installment agreement, which brings us to that next one, Andrew. What happens if, they can't full pay and let's just say you run their numbers and they're negative? What happens? They don't have any available money. What's the next
Yeah.
option?
So perfect example of that is the currently not collectible status. And so what this status is basically saying is, let's just say that you had a W-2 job and you were working, and then all of a sudden you got laid off, or you got demoted, or for whatever reason, that collection of financial potential is negative now. So you can't afford to basically live, let alone pay back the IRS. That kind of gets you into that currently not collectible status, which is basically just saying, hey, I can't afford to pay you right now, but when I get a job, maybe I can later. The problem with this particular status is your tax debt is still accumulating penalties and interest. The only difference is they can't levy your account and you can't put a wage garnishment on you because you just can't afford it right now. But that penalties and interest all is increasing with your tax debt. And so one particular strategy, especially if your tax debt is old, is get into this currently not collectible status if your financial situation allows it, and wait for that tax debt to expire. Again,
this is one of those. It's a powerful move, not really permanent in terms of, like Andrew said, that tax debt continues to accrue. It's not going away. And if you get into that official status, it's also you're going to get a tax lien on any assets that you possibly own. The good news about a tax lien with that currently not collectible status, it does not go on your credit report, unlike a California tax lien. IRS tax liens don't go on your credit report, but I think it's a powerful move, and sometimes it's a move that you use as a temporary situation because you're trying to attempt something else.
Right.
And where I'm going with this is that I've had multiple situations, Andrew, where somebody qualifies for that next option, and we're going to talk about an offer and compromise. But let's just say, and we'll talk about that option. So they can they potentially qualify for that, but they have some unfiled tax returns, maybe. They have they haven't been making estimated payments, which both are requirements for that offer that we're going to talk about in a second. But
Right.
let's just say we believe that they're going to be a good candidate for that. So a temporary solution would just be to get them into a currently not collectible status. So that's a great status if we can get it. And I'll tell you the other thing, Andrew, and it just kind of popped in my head. The other great avenue for a currently not collectible status is on every option with the IRS, whether it's the installment agreement, the partial pay installment agreement, or an offer that we'll talk about, you have to be fully compliant in terms of filing your tax returns. All tax returns have to be filed, at least the last 6 years. But let's just say you don't have the ability to get those tax returns done. Maybe you don't have the documentation. Maybe you don't even have the money to do, multiple years of tax returns because, it can get expensive if you haven't done, 6 years of returns. It's going to cost you to get those returns done. So one thing that's great about that currently not collectible status is that you do not have to be fully compliant. All the tax returns don't have to be filed to be eligible for the currently not collectible status. So that's another reason why you would actually take advantage of that. But again, like Andrew said, be very careful with understanding that the tax debt's not going away. It's going to accumulate penalties and interest as long as you're in that status.
Right. So, and the collection statute does continue. So eventually it will expire.
Oh,
but
I'm glad you brought that up, Andrew.
Yeah, eventually it will expire. But again, you got to look. That's why when the clients come in, you got to really look at the entire case. And it's hard for somebody, especially a salesperson, that try to quote you and determine all this over the phone in their first call. So we have to run detailed analysis on which option applies to you. But yeah, your C said your collection statute of expiration date, that 10-year time frame in which the IRS has to collect, it still continues with the CNC collect or the CNC status. So your time frame is still running. So eventually that tax debt will run out.
Yeah, that's a great. I've used that so many times over the last 10 plus years of doing this. Is that before we deal with the tax debt, guys, understand we do a triage on your situation. And when we say we do a triage, is that we're being like medics, and we're going to find out exactly what's going on with the IRS. We want to know what's going on, and one of the most important things that we do when we file that power of attorney and are able to get those records is that we're determining when does your tax debt expire. Because before we can get the actual date it's going to actually expire each individual year. And if some of those tax debts are going to expire, and if you see me looking to the right, the World Cup Spain versus Belgium is on, and they Spain almost scored another. Oh, Spain just scored again. So talking about this, the reason we got to know those dates is because we don't want to do anything that's going to add additional time for them to collect on that debt. And the case that I always talk about, it just because it was a big one in my career, is that I remember I had a Hollywood entertainment producer director that came to me with a multi six-figure tax debt. And when I was looking at his records, and I found out that he had literally almost $500,000 of tax debt that was going to expire. It was an extremely large amount. And I told him, I said, here's what we're going to do. We're going to do absolutely nothing for the next few months, other than monitor to make sure they don't do anything aggressive, come after your bank accounts, or pay, do any type of paycheck garnishments.
Yeah.
And initially he got upset. Andrew, he got really upset with me. He goes, "What do you mean? I paid you to do nothing?" I go, exactly.
Yeah, exactly.
Here's what's going to happen is that this debt is getting ready to expire, and it was like a short time frame, 4 to 6 months, and that debt is going to go to zero. So our best bet is just to monitor this thing, because the IRS hadn't done nothing up until that point. And sometimes sometimes people slip through the cracks, and the IRS doesn't do nothing. And in this situation, it was one of those, and we waited that time frame, and that all that tax debt actually expired. That's a powerful move, and it's the importance of why we do that initial triage.
Yeah, so that hiring you cost him or saved him $500,000.
Just about. It's just because it was a smart thing.
And also,
so let's talk about the next one. Well, Andrew, so let's just say, obviously, we talked about the first two, which basically we're repaying the tax debt.
Right.
That second one we just talked about, that currently not collectible status, is just like, hey, you don't have the ability to make any type of payment right now. The next one is the one that everybody hears on the radio, they hear on TV. If they call some of those big name, call those commercials and talk to people, they're going to convince you that you qualify for it, even without looking at anything. They'll say, "Oh, you qualify for this." And what is that, Andrew?
That's the offer and compromise, or the OIC. It's kind of funny because recently I've been getting random phone calls by these, I guess it's an AI robot, just making phone calls saying that, "Hey, there's tax debt on your account and you're qualified for an OIC." I'm like, what? You don't even know who I am. But yeah, so this offer and compromise program, again, it's completely based on your financials. And it's when we talked about that equation, if your allowable expenses are higher, if you're positive and negative in terms of cash flow, if you're low or even negative on that equation, you may qualify for an offer and compromise. But that also has to deal with when your tax debt is going to expire as well. Because what the IRS is basically saying is, based on how much tax that you have left when it expires, how much money you have left over, are we going to get more money or less money over the course of time by basically having you settle for a certain amount? And we run that equation, and usually it's whatever you have left over times 12 months is the actual offer amount. You put it on a 20% down payment, and then if they accept it, you pay the rest of it. If they don't, then that 20% just goes to your tax debt. So in a way, you don't lose anything, but again, not a lot of people qualify, and vice what you hear in these commercials.
Yeah, ultimately, you know what? It's just everybody wants this offer and compromise, basically settle for pennies on the dollar. And almost nobody, the commercial promises, basically they say everybody qualifies, and they will convince you on the phone that you qualify. And like Andrew said, the IRS, when it comes down to this offer and compromise, they're going to do a deep dive on your financials. They don't just give this away, and they're looking at everything from how much money are you making, how much money is coming into the household, how much equity, if you own property, how much equity do you have in your property, how much equity do you have in your retirement accounts. They're looking at everything, and they do a deep dive into your financials. And what we tell people, and in most cases, me and Andrew, with about a 10-minute conversation with us, you want to save yourself tens of thousands of dollars, book an appointment with us. And we can tell you whether there's even a possibility for an offer in compromise. Nobody can ever tell you 100% you're going to get it. That does not exist. We can't tell you that, because ultimately the IRS has a decision, gets to make that final decision. But what we can do, we can get a rough idea of what your total assets are based on our conversation. We can get an idea based on your income, your family size, and your expenses. That the IRS has different expenses in different parts of the country that they're looking at. So, that's what you want to kind of, when it comes to the offer, I guess this is probably the most important thing, Andrew, I could tell people when it comes to an offer is be very careful if somebody just tells you on the phone based on a brief conversation that you qualify. I've seen way too many people that paid 5, 10, 15, one individual, almost $40,000 to people that told them that they qualified, only to find out that they never qualified. And our job is to protect you from that happening to you.
Absolutely. So, and that kind of brings us to our final option is bankruptcy. And obviously, we're enrolled agents, so we don't specialize in bankruptcy. I'm not sure if you have any clients that you refer to in these particular cases, Ed.
Yeah, and here's the thing: it's just bankruptcy. Is bankruptcy an option? That is a big question. Is bankruptcy an option for taxes? And yes, bankruptcy is an option for taxes. Now, here's what you need to understand. Bankruptcy is an option for certain types of taxes, specifically income tax only. If you owe payroll tax, trust fund taxes, they're never dischargeable, ever. Income taxes are, but there's also very specific rules, timing rules, when it comes down to trying to bankrupt tax debt. Basically, 3 years, there's a timing rule, which basically says that 3 years since a return was filed and was due, 3 years since the return was due, 2 years since it was filed, and 200. Basically, bottom line, once you file your tax returns, you got to wait roughly 3 years. So that is the bare minimum. 2, all your tax returns have to be filed. It gets complicated. That's why we don't specialize in it. We're not bankruptcy attorneys. We don't do this. But you know what? I have told many people that there is, when you're looking at possibly bankruptcy tax debt, there's got to be other, in most cases, you're looking at other tax, do you have other debt, credit card debt? We can give you an idea with the triage that we do. We can give you a bankruptcy report to give you an idea of whether some of your tax debt are eligible for bankruptcy. We have bankruptcy attorneys that reach out to us that request that report. We give it to them. And we're going to recommend that you speak with the bankruptcy attorney, but it's possible. So, and that's the only reason we wanted to bring it up, that it's possible to bankrupt tax debt, but there's very specific rules and timing issues that we have to, that have to be played into consideration. I was debating whether, even to bring this up in this conversation, but I thought it'd just be important because a lot of people ask, well, can I just bankrupt this tax debt? And again, yes, it's a possibility. It just depends on the type of tax debt, when you filed, and a variety of other things that the IRS is taking a look at.
Yeah. So we have a lot of other programs that might fit you, better than bankruptcy. It's kind of like our last resort option. And our job is to keep you out of court. And so, lawyers put you in there. So
Yeah. Um, Another thing, Andrew, and before I tell you the final option, there is a final option that we haven't really kind of discussed. We mentioned it at the beginning, but let's talk a little bit about the state of California, the California Franchise Tax Board. If you owe the California, because we live in California, we specialize in California, and there's a lot of states actually that are very similar. So,
Right.
but if you owe California too, there's a whole set of other doors, different rules, different clocks. Cali Claw, the franchise tax board, they play a totally different game, and it's their own show. So we're not going to go into that today at all. There's no reason for us to go into that today because that's a whole other topic.
Mhm.
But understand that the rules are completely different when it comes down to the states, if you're dealing with the state. But Andrew, so here's the final option. What is the final option if you don't give us a call and you don't pick one of the options we just gave you there? What option is of it? What option will the IRS do to the client if they don't pick an option?
So an option the client does, and it happens probably 90% of the time, is the client does nothing. Client, waits, puts their head in the sand, and they wait for the notices to come. They put them in a drawer. They hide it from their family, and they just don't do anything. What happens is collections happens, and that's the IRS at the option, or the IRS chooses for you. And collections, obviously, if you're watching this channel, you've probably seen one of the notices that you might receive. You will get liens. You obviously will get to the point where they'll start levying you or putting a wage garnishment on you, or revoking your passport is another one they can do to you.
That's happening a lot right now. I'm seeing a lot of passport revocations are coming through, and this is probably the most terrible option. I've got right now multiple clients, almost $1 million tax debts, clients with state tax problems, $200,000. Kind of something a little bit about the states. The states puts you on a public website on how much your tax debt owes. The states can, or I know California will take your occupational license away. So if you're a doctor or nurse, any type of a state license will take it away. They can take your driver's license away. The state is aggressive when it comes down to this. But as Andrew said, if you don't do anything, if you're watching this video and you got a tax problem or you haven't filed your tax returns and you don't do anything, you're selecting the option. And the option is that the government is going to do whatever it can to come after you for that money. And the thing is that don't be afraid. If you don't have money, don't be afraid, because there are options for you when you don't have money. With each of these agencies, the problem is everybody's just quiet. They think that because if they just stay quiet and don't say nothing, that the IRS is going to forget, or the FTB. These guys don't go away. The problem never goes away. It just gets bigger. It's that what's that snowball effect, Andrew, that as it grows down, it just gets bigger and bigger. Right. So and that's the option you want to stay away from. You don't want them telling you what their option is. You want to be able to walk in there and say, well, these are the options that I'm looking at. And then our job is to have that conversation with them to get you in that option.
Yeah, the conversations, the documentation, everything that goes into resolving one of these cases. And a lot of people don't realize it. It's a lot of front loading of doing the work, because you just don't want to show them saying, I don't know, choose for me, right? That's why you get one of us involved. We'll make sure you're on the right track, and making sure you're not taken advantage of by obviously the government or one of these other large corporations.
Absolutely. And, and obviously, Andrew, up in Monterey, he's becoming our resident expert on military taxes, tax problems. You can see his alumni shirt there. Oh, yeah. Actually, you're an alumni now, Andrew, Naval Academy graduate there.
Speaking of that, I'm actually working on my second book. I'm hoping to have it out by the end of this month. And it's going to be specifically for military tax problems. Awesome. And so it's going to be a specialized book just for them.
And that's awesome because it's needed out there. You know, there's so many, not only active duty soldiers with tax issues, but the millions of veterans throughout our country that have tax problems. You know, a lot of these veterans come out, they start businesses and get themselves kind of in the jam when it comes down to the IRS or their state tax agency. And what you have here is a family that has served 4 generations of military right here. Everybody from our grandfather, our great grandfather, or my grandfather, Andrew's great grandfather, Marine Corps, Guadalcanal, to our fathers in the Vietnam War, to myself in the Army, Andrew, Navy Academy graduate, Navy veteran, and now our daughter in the Coast Guard. So big time military here. We're here to serve you. And, you know, if you like this, you know, give us a like, give us a comment. We just trying to have a conversation, you know. You'll notice that we get our ums and ahs. I don't even take them out. We leave them in there. We're real people ready to help you. We're licensed individual. And on top of it, a big news. I totally forgot to bring it up at the beginning of this. Even my wife, Liz, she is actually getting her enrolled agent license. She's down in San Diego today, taking one of her boot camp courses on that. She's probably one of the biggest experts on when it comes down to dealing with taxes, collection issues. She knows more about IRS collections than most people that I know, but doesn't have her license. So we told her, why don't you get your license? So I'm super excited for that. But again, we're here to serve you. Andrew, if somebody wants to get your current book that you have behind you, what's the website on that one?
So it's irsbattleplan.com. You can read it there, just irsbattleplan.com.
It's irsbattleplan.com. I should have known that one, but
yep.
But yeah,
and so you just put in,
you
just put in your name and email, and then the next page you'll be able to download that book completely free, or you can buy it on Amazon.
Sounds good. And then you know, my signature book, taxdebtbook.com. It's in the 2nd edition now, so feel free to pick that up. Or if you just got challenges, always feel free to reach out to our offices. You can get our contact information. Will be in the details on this video. So with that, Andrew, good to see you. Actually, we're heading out to Monterey in a couple of weeks, expanding our business out in the Monterey area, as Andrew's doing right now. But we're super excited to get down there. So talk to you guys later. Have a good week.
Have a good week.